A massive storm rolls through. From the street, your roof looks completely fine, but up close, it is a different story. Severe hail damage often hides in plain sight. Think of dropping a golf ball onto an apple. The skin on the surface might not break, but underneath, the flesh is bruised and soft. That internal bruise eventually rots the entire apple. The exact same physics apply to your roof. When 3-inch hail hits an asphalt shingle at 80 miles per hour, the kinetic force crushes the internal fiberglass matting. This creates microscopic fractures you cannot see from the driveway. Rainwater inevitably seeps into those microfractures. When winter hits, that trapped water freezes and expands, physically prying the roof apart from the inside out. If you choose to wait and see if leaks develop, your insurance claim window, which is typically exactly 1 year, will expire. By the time water starts dripping into your living room, you will be paying a $30,000 replacement cost out of your own pocket. Recovering from a severe storm forces you into a high-stakes negotiation against 3 competing entities: profit-protecting insurance adjusters, out-of-state storm chasers looking for a quick payout, and rigid mortgage banks. If you hold an FHA loan, a government-backed mortgage designed for low to moderate income borrowers, the process is significantly more complex. Because the bank holds the note, they are legally a co-owner of your insurance settlement check. The lender has a fiduciary duty to protect their collateral. In practice, this means they will actively restrict your repair funds through strict bureaucratic oversight, holding the money until specific inspections pass. You have 2 choices. You can take the path of least resistance, which frequently ends in abandoned projects or accidental insurance fraud. Or you can execute a calculated plan to properly assess the damage and secure your home's equity. Optimizing an FHA claim is a necessary defensive strategy. If you fail to manage the process correctly, you risk a catastrophic hit to your home's long-term resale value. Insurance companies routinely try to classify severe storm impacts as standard wear and tear or neglected maintenance to deny coverage entirely. To prevent this, you must rely on the melting evidence rule. Capturing photos of ice covering your yard within minutes of the storm proves the sheer volume and intensity of the strike. You should also physically place a hailstone in your freezer. Presenting literal ice to an adjuster is undeniable proof of the object's terminal velocity and its capacity for functional destruction. Next, locate collateral evidence of force. Inspect the soft metals around your property. Dented air conditioning fins, pockmarked window wraps, and condensation inside shattered skylight seals provide concrete proof of the storm's severity. Overwhelming, time-stamped evidence forces an adjuster to acknowledge a sudden catastrophic loss, leaving them no room to argue age-related decay. Within 24 hours of the storm, out-of-state contractors will knock on your door offering a free inspection. These storm chasers often do rushed, poor-quality work and vanish before the first leak appears. They might also offer to waive your deductible. In states like Illinois, a contractor offering to eat your deductible is committing insurance fraud, and signing their contract makes you legally complicit. The alternative is hiring a licensed public adjuster, or PA. A PA is an independent insurance professional who legally represents you, the homeowner, rather than working for the insurer or the roofing company. Their primary weapon is state legislation, like the Illinois Reasonably Uniform Appearance Law. If your siding is damaged and the original color is discontinued, a PA uses this law to demand a full property siding wrap, preventing the insurer from paying for cheap, mismatched spot patches. This chart shows a typical $15,000 initial lowball offer, next to a $46,000 optimized payout negotiated by a PA. Even after surrendering a 10% fee to the adjuster, the net payout significantly exceeds the original offer. Paying that fee is a calculated investment. It leverages state law to fund a code-compliant, full-scale property restoration. With an FHA loan, insurance checks are made out to both you and the bank, which immediately locks that money in a restricted escrow account. This creates the deposit dilemma. Contractors need upfront material funds, but the bank demands strict paperwork first. An impatient homeowner will often make a fatal error, paying the contractor's deposit out of their own personal savings to get the job started while waiting for the bank. If that contractor strips the roof and abandons the job, your savings are depleted, and the FHA escrow funds remain permanently frozen. To defend against this, you must force your contractor to accept standard insurance pay cycles, hold all personal funds until the bank releases the initial draw, and require the contractor to sign conditional lien waivers. Strictly adhering to the FHA escrow draw schedule is the absolute firewall that protects you from contractor abandonment and financial ruin. In the first 48 hours after a strike, freeze a hail sample, record video of any skylight condensation, and audit your insurance policy for hidden 1% wind and hail deductibles. If you lack the time to manage the bureaucracy, negotiate a flat fee with a public adjuster that explicitly includes FHA escrow management. There are 2 non-negotiables. Never sign a doorstep contingency contract, and never pay a deposit from your personal savings on an FHA claim. In this ecosystem, the insurance company optimizes for savings, the mortgage bank optimizes for collateral, and the storm chaser optimizes for speed. You must optimize for yourself. Enduring the 45 days of bureaucratic friction required for a fully optimized claim is the necessary price of defending your home's equity against catastrophic loss.